Thank God it's Friday. Welcome to the Friday edition of 55 Minutes of Current and Relevant Business Conversations here on Business Morning. I'm Ini John Mekwa. We start, as usual, from the global space, and we see that oil prices fell on Friday and are set for a drop for a second week. And, well, some concerns of trade war between the U.S. and China, the two largest economies in the world, that would crush crude consumption, and their dispute curtails economic growth. So we see Brent this morning losing 31 cents, that's 0.5%. It's on $63.02 a barrel this morning. WTI is down much more than that one and is at $59.71 a barrel. Benchmark settled over $2 lower yesterday, Thursday. Brent itself is set to fall about 4% this week, adding to an 11% drop in the prior week, while WTI is set to decline 3.8% after also falling 11% last week. A prolonged trade dispute between the U.S. and China is likely to reduce global trade volumes and disrupt trade routes, eventually weighing global economic growth as the world's two largest oil consumers. That will also impact crude consumption and, of course, the price. Trade war between the two economies has ratcheted up about U.S. President Donald Trump's raised tariffs, which we know against China is now 145%, even after announcing a pause on heavy tariffs, that's the reciprocal tariffs, against dozens of trading partners on Wednesday. China, in turn, of course, they have also announced additional import levy on U.S. goods, raising their tariffs to 84% on the United States goods. And here in Nigeria, a bit of good news from Dangote refinery as they announce a reduction of ex-depot price of petrol to 865 naira for a litre. The price adjustment marks a 15 naira drop from the 880 naira for which it was sold to consumers in some parts of the country, and as at Wednesday, April 9th, and a 65 naira reduction from the 930 per litre sold in most parts of the country, in other parts in the last few weeks. The move comes a day after the Federal Executive Council directed the full implementation of the Naira for Crude agreement between local refiners. Also follows a review meeting earlier this week between the Minister of Finance and Coordinating Minister of the Economy and representative from Dangote refinery, which we know is a major beneficiary of that crude for Naira policy. Meanwhile, the Petroleum Products Retail Outlet Owners Association of Nigeria, Petron, they've commended the government's decision to continue the Naira for Crude policy. In a statement by its national president, Billy Harry, the association says that the development is part of a broader effort to stabilize the downstream sector. The association describes the Naira for Crude policy as a long-term strategy, which is what the government has said, that will support local refining and conserve foreign exchange reserves. Petron is optimistic that the Naira for Crude policy will insulate the nation's economy from the global market volatility, while the benefits of lower global crude prices will be passed on to the consumers. Well, away from the oil and gas area now, in a bid to boost its economy and agricultural potential, the Cross River State government, in collaboration with the African Development Bank and the federal government, has flagged off the establishment of a special agro-industrial processing hub in the state. Speaking in Tinapa, Calabar, the venue of the groundbreaking ceremony, the governor explains that the hub will enhance agricultural productivity, improve food security, and empower local farmers, while the president of the African Development Bank, Dr. Akinwumi Adesina, reaffirms the bank's commitment to supporting inclusive agricultural transformation across the continent.
Today marks a watershed initiative by my administration in establishing the renewable resource base of the state by fully utilizing agriculture and its multiple value chain. It is an incontrovertible fact that the extractive industry, which embodies oil and gas exploration, quarrying of solid minerals, mining of rare earth minerals, etc., has a definite quantum to be extracted before it's exhausted. What is left behind includes dry oil wells and deep craters in mine sites. But the arable land with bumper yields that accompanied agro-business remains renewable every passing year, defying depletion. This is the wonder nature holds in store for human beings to live and also to thrive. This paradigm shift from non-renewable to renewable resource base also holds the key to the prosperity of many nations. Hence, an imperative to join the League of Subnationals in Nigeria that adopts agriculture as the mainstay of its economy. For us in Cross River State, the establishment of a cluster of smallholders farmers in staples and cash crops such as rice, cassava, millet, cocoa, oil palm, etc., across the state is a right step towards the agro-industrial revolution. Besides, the farmers are engaged in mechanized agriculture. Since the financial resource that accrued to the state is negligible as compared to the requirement for the establishment of both the special agro-industrial processing zone and the agricultural industrial hub, there is need for the private sector partnership. To this end, the African Development Bank, in collaboration with the Federal Ministry of Agriculture and Food Security and the government of Cross River State, have found a strategic tripod team to drive these projects. The deliverables of the envisaged projects are food security, diversification of the state economy towards export-oriented trajectory, and increase in the state gross domestic product, our GDP.
I am delighted to be here today for this landmark groundbreaking ceremony for the development of special agro-industrial processing zones in Cross River State. I wish to congratulate you, Your Excellency, Governor Bassi Otu, for your incredible leadership, vision, dedication, passion, and tenacity that have led to this historic groundbreaking for the development of the special agro-industrial processing zone in Cross River State. 2 days ago, I was together with His Excellency, Vice President Kashim Shettima, and Governor Uba Sani in Kaduna State as we did the groundbreaking of the special agro-industrial processing zones for Kaduna State. And here we are again today in Calabar to do the same. How exciting. We are on a journey of good news across Nigeria. It is indeed the beginning of a new dawn. The special agro-industrial processing zones is bringing good news to Nigeria. State governments and local governments. Good news to farmers, agribusinesses, and all rural areas of Nigeria. Good news of jobs and wealth and prosperity with agriculture as a business. I wish to commend the federal government of Nigeria under the able leadership of His Excellency President Bola Ahmed Tinubu for the strategic partnership that we have together with the African Development Bank for the development of these agro-industrial processing zones in Nigeria.
Now, the Nigeria Electricity Regulatory Commission has penalized 8 electricity distribution companies because, according to them, they failed to adhere to the monthly energy caps imposed on estimated billing for unmetered customers. And I hear reactions following this that a lot of consumers are happy about this, but also even those who have been capped or grouped into the Band A, Band B, and Band C also have their own complaints. How much electricity have been given onto them? I think they're supposed to have at least 20 hours a day or so. Let's delve into this, because even with all of the agro-processing areas and zones, electricity is at the center of its functionality. So let's discuss this now with the Managing Director and Chief Executive Officer of Enerplus Energy Solutions Limited, Mr. Yusuf Tumi Abubakar, joins us from our Abuja studio. Good morning, Mr. Abubakar. Welcome to the program.
Good morning, Annie. It's been a while. Thank you for having me.
Yeah, good to have you. So I don't know if you heard about this story of discos being penalized because they're not able to meet up with the electricity level they're supposed to distribute to unmetered customers. And of course, we've been talking about the issue of metering. The minister told us that the first batch of about 75,000 meters will be accepted. This will be received this month. and another about 22,000 or so will be received next month. So we keep talking about metering and all of that. But for you, do you see positive movement in the area of electricity generation, supply, distribution in the country, in spite of all these policies and talks that we've been hearing in the country?
Thank you very much, Ini. Like the last time we had a conversation, policies take time, and also putting those policies in effect also takes time, which means engagement with the people. And also, if you look at the system we have, it's been manageable for a very long time, and we've managed to make it work. Now, this time we need to make sure that people are onboarded on metering, because metering is an integral part of electricity generation and distribution. We need to know how much consumption we're even bringing out there. All those data needs to be captured. So I think it's a step to the right direction. Nigerians would have to work with the government hand in hand. It's more of a collaborative effort between the government, the people, and the investors in the business. Sorry, I think the line is breaking a little bit.
No, go ahead. I can hear you. I can hear you, Tumi. Go ahead.
Okay. All right. So policies are very, very important because it drives investors to come in. No investors is coming to a structure where there's no structural policy that would make their investment viable. So, and also engagement, incentivizing the masses as well, trying to, the communication gap should also be filled, because it's very important that we have consistency in communication. And I've also seen a lot of great policies, like the REMP, rural REMP and REAP as well, which is a national energy efficiency policy, which pushes sustainability, and then the rural electricity as well. So all those policies are eventually going to give us better grids, and also the renewable energy that's coming in. So I feel we need to do better in terms of partnership, and we can see how this expansion of policies and investors can collaborate and coexist effectively.
Yeah, well, the thing is, to me, even yourself, you've mentioned like how many policies in the electricity sector. So these policies come. I remember MAPS. MAPS is, I think, it's about 7 years old now. That's a meter asset distribution. We have a certain group of people that are supposed to deal with the meters, which obviously supposed to drive the electricity distribution. And we've had a lot of policies, but can we say there's a movement, there's progress at all, in spite of these laudable policies and announcements that we have heard?
So, and this is where communication is very effective in this industry, because it's a very sensitive industry, and not just I can tell you for sure how effective the policies have been. If you look at what the REAs are doing from the rural electrification side, making sure decentralized and renewable energy comes in to coexist. The meters as well, we could do more. We could actually do more if we have more metering vendors. To the population of disenfranchised meters is a whole lot to capture. I can tell you that for sure. So we need even more better technology in making sure that we can capture more houses and more people who needs this meter. Estimated meter would not really help us in the long run, in all honesty. Looking at what we've had. But I also looked at the mix 50-50 of Mr. President that has to do with the mix of renewable energy, wind, solar, and if we can achieve those within states, you know, and because, like you said, we have a lot of policies. We also need state governments to, take the lead as much as the federal government is taking the lead, because that would bring even more innovative way of how to generate energy, because different states has different resources on energy generation. So I don't think we will follow the policy, because we need the policy. We need the policy for investors to come in. A lot of times, 9 out of 10 times, why we don't see investors are because of policies. No investor would bring millions of dollars in this industry and want to invest, and there are no policies supporting that investor's investment. So I know we've had this conversation back and forth about policies, but we need it. We need the consistency of it, which is very important. I think Mr. President and his team, they're trying. And I think also if we can all come together, because this is much more of a collaborative effort as opposed to an individual effort. The federal government cannot solve the power issue alone. The private sector cannot solve the power issue alone. We need also the masses to comply in terms of making sure they use the metering that we have, because it's a profit-driven venture. And if we really want to move to the next level, we need to sort out the energy problem we're facing in Nigeria today. We have the capacity, we have the resources. We just need to be more creative about how to achieve these things. So I think the policies would work eventually. Nigeria should be patient with the present government. And I think if we can, create more communication and find a way to bridge those gaps, we would see the light, definitely.
Well, we have the policies. Investors, I think, apart from hearing or reading the policies, they would like to see the policies in action. That is also what they need to get confidence. But, I mean, talking about the states, we know that there's a law now that empowers states to work with the private sector, mostly generates, distributes energy. So, and we hear some states have domesticated it and are working on it. They already have some partners and all of that. But you did talk about President Tinubu's aim of 50-50, talking about the energy mix by 2030, from where you are and what interactions you've had in the sector. How can we really achieve that? Because I don't know, it doesn't look like we have some intentional action that's driving towards 2030. That's in 5 years, and there are infrastructural gaps to be covered. There's also the sentiment of adoption to be covered. The other day, the federal government was proposing banning import of panels, solar panels, and a lot of individuals in that value chain say it wouldn't be a good idea. So does it look to you that we can achieve that 50-50 by 2030?
I think we can really achieve. I think it's a good mixed policy that is provided, looking at the problems we have with the failed grid most times. And that also could be a process where the grids can be supported by those three mix, the solar, the wind, and the turbines. And I know the problem we as Nigerians, when we look at policies and we feel like it's not being effectively put into action. And I would like to really say that, not to also give an excuse for the government, but also say that these things take time. The state can also, based on the rules that we have today, that the state can generate its own energy. I think it's a good way to move decentralized energy, to also find a way where the state can also be supporting the federal government, and then they could be back and forth balance sheet in terms of energy. Like I said, energy is a profit-driven venture. And this could also spawn the industrialization of Nigeria, because we need energy to do our manufacturing. So if we're talking about the solar silt or structure that we need to put in place, we need those policies to go through. One, for manufacturing, for investors to be able to come and put solar factories, because that means we'll be competing directly with one of the biggest solar manufacturers around the world. So we need all those policies to go. We also need engagement within financial institutions, the banks, common tokenized structures that could work for our energy grids within the renewable energy sector. We have a lot of young people, and I'll say to you, Ini, we have a lot of young people that have been working on this renewable energy sector. You would be amazed how many young people across Nigeria that have been working in this energy sector, even in the rural, especially in the rural areas. I can name you a couple names, and not to go into that. But I would also like to say, financial institution needs to support. It's very important because finance to build any energy as much as a 1 megawatt, you're talking about 1.8 million, give or take. And this is a lot of money. So people who are actually in the business know how much money they are losing. So we need not just the policy, but the enforcement of the policy. And then we need the compliance of the people to understand that, for us to move to the next level, these are the hard pills we need to swallow. And I feel with deliberate and concise intention from the state government would go a long way in terms of our energy, would transition, because energy is never enough. No matter, even if we try to do 1 million megawatts, there's still going to be demand. Grids might go off. You still need to support the grids. Technology are wearing out. More new technologies are coming in. Consumption of manufacturing are going up high. So we need to bridge all those gaps. So when it comes to manufacturing, I think it's a really good idea what the president is trying to do. Nigerian standard-based products, so we have value chain within our ecosystem, and it also gives us that independence because it's if you look at it in a broad spectrum, energy security is actually very important for any state.
All right,
so
just a moment, just a moment, because we have to lead our DSTV viewers now to Taraba State, where there's a flag off of Free to Shine triple elimination campaign of HIV and AIDS. Syphilis and hepatitis. Taraba State has been really busy since yesterday, and it's happening at the Jolly Yame Stadium in Jalingo, the state capital. That's for our DSTV viewers. For our viewers on other platforms, Business Morning still continues. If you're watching on YouTube and you want to stay with us here on Business Morning, just switch to the next window, the next YouTube platform, and you'll stay with us. So sorry, Timmy, please do go ahead.
Okay, so the energy policies are very important. If you look at Renewable Energy Master Plan by Energy Commission, you would see they have a structure of what they are trying to achieve within the Energy Commission. And there are different parastatals. Rural electrification has its own policy on achieving rural electrification within the rural areas. So at least our rural clusters could actually produce more products and be independent to also export as well. So energy is very important in every strata of our economy, be it the rural side. And but when you're coming to invest such equipment, such large technology, especially on the renewable side, it costs a lot of money. You also need to make sure that money you're recouping it in the next 30 years. So I think we need long-term plan. We need financial institutions to make inclusion within the private sector, the public sector, and the masses, and say, this is what we're doing. This is our roadmap. This is how we want to achieve it. We're going to give you lights. We're also going to charge for these lights because it's not free. Energy is not free. I think the subsidy of energy should be restructured.
All right, and we hear a lot of that, removal of subsidy on energy, electricity, and all, and we'll see the steps that the government will take in dealing with that. Thank you so much, Managing Director, Chief Executive Officer of Enerplus Energy Solutions Limited, Mr. Yusuf Tumi Abubakar.
Thank you very much, Amy.
We're still discussing electricity in the country now, but we are speaking with the Managing Director and Chief Executive Officer of Kensington Energy Limited, Mr. Chuk Swani. Mr. Wani, good morning and welcome to the program.
Morning. Thanks for having me.
Good to have you. So, I mean, I don't know if you heard a bit of the conversation I had with the last guest. I'm talking about the energy mix and adoption of renewables. What's from your interaction with consumers is the sentiment around adoption of alternative sources of energy at this time?
Thank you for that. Basically, as a business and our interactions with the consumers, for a consumer, what they want is power. However it comes from, they want electricity to be provided in their homes. They want electricity to be provided for their businesses. But for the country, because we know the challenges we are having in terms of having one source of energy. And that's why, just like Abubakar earlier mentioned, they came up with different energy mix. The idea is such that even if there are constraints on one particular form of energy, the other part of energy are able to support, both in terms of pricing and in terms of availability. So energy mix, it's a kind of a program that I think the federal government of Nigeria has been pursuing as part of the long-term policy strategy in ensuring sustainability and the energy reliability in the country. So we believe that having that in terms of the solar, the hydro, and every other forms of energy to support the our-based energy, major energy mainstream, which is basically gas, we help in terms of creating that kind of energy security for the country.
But for you as a player from the private sector, are you involved in the renewable side of it?
Yes, of course, we are doing something on the renewable. However, because there are what we call comparative advantage. Each locations have a comparative advantage in terms of what kind of energy we should bring into the mix. Like when you have an area where there are hydro and you're able to generate at a very good, coming at a good pricing point. So it becomes very good for you to consider that as a part of your energy source. Also, in some locations where you do not have maybe gas and you have a lot of sunshine, or where there are infrastructure deficits in terms of moving power from one location to another. That way, we also consider that, look, having an alternative source like a solar power to provide some level of support will be more sustainable than building a long-term infrastructure. So basically, the consideration, it depends on where you have a comparative advantage. Those are where such decisions are made.
How has this affected the issue of pricing? Because pricing is the reason we have band A and band B, at least one of the reasons. I think availability is the other one. How has this affected, this band A, band B, and the pricing model that is being used at this time?
Okay, basically in terms of the energy mix, that's why we have energies that are expensive, energies that are very cheaper, and then you also have a middle ground. And that's basically what NEC as a regulator does, is to bring this energy together and try to be able to have a kind of a price point that the consumers are going to be very comfortable with. Because, you see, when you try to generate certain type of energy from a certain location and it's very expensive, you don't move the entire pricing to the consumers in that location because it will be too difficult for them to be able to afford. And what NEC does, which is why they have this energy mix, is to bring this energy together and try to create an average tariff that will help to make this energy available and sustainable. So you do not really have to pass the entire cost to the consumers.
So, which is why we have subsidy now, and Mr. Bubakar also talked about there might be a need to remove the subsidy. Where exactly does the electricity subsidy come in the value chain?
Okay, the electricity subsidy comes in basically at the last mile, which is in terms of, instead of passing the full tariff on the consumers, part of that tariff is taken upon by the state in terms of the tariff. Like today, if you look at the band B tariff, you will agree with me that that band B does not even cover the cost of the energy generation, which is hovering between 110 to 125. So it means that those in band A are actually, to some extent, subsidizing those in band B. And the government, to some extent, is also subsidizing the entire sector by ensuring that these full costs are not passed to the consumers. However, one of the things we're also looking at, another way of this, the subsidy comes in the sense that you have the hydro, which comes at one of the cheapest in terms of pricing. So the hydro comes at a very cheapest in the pricing, and when you consummate the hydro generation together with the gas generation and other forms of energy mix like the solar and all that, the government is able to use the pricing model coming in from the hydro to provide some kind of balance in terms of pricing. Whatever is the difference that goes to the final consumers, the government is able to come in and able to support that, such that the value chain, the entire energy value chain, do not suffer, coming from those who provide the feedstock, like the gas, to those who provide the generations, like the big gencos that are connected to the national grid, even down to the of course the retail market, which is the distribution companies.
Okay, but so if electricity subsidy was to be removed now, can you help us understand what pricing would look like?
Today, if we could have what I could say full deregulation in terms of pushing in the total price to the consumers, we'll be looking at in the average of between 190 to 210 naira per kilowatt hour, all depending on certain sector in terms of the of course the FX issue, the gas price, which is the major mainstay in terms of our power generation. However, there are some variables in terms of embedded generation that could come in a little bit cheaper than this, which is having this generation closer to the consumers. So you could have in between 170 to that's 210, all depending on the pricing of your feedstock. So these are where we believe that the pricing template for the full deregulation of the power sector should be. So you won't have some people paying 58 naira, some paying 85 naira, because they are not actually paying the true cost of this power. So everybody within that actually takes power from the grid, who may have to step up in terms of the tariff. So within 180 to 200 naira per kilowatt hour.
Okay, so many have said that if this were to happen, the subsidy were to be removed, it would be an incentive to get more investment fund into the sector, and that could deal with, the issue of infrastructural gap, which they say is why we have a lot of grid collapse and everything. But from your perspective, how do we balance this? Because, of course, then it will be really expensive for consumers, but we also need those investors to come in and deal with the infrastructural gap, especially now that states are empowered to play a major role in this. How do we find a balance in this picture?
Well, for us as a business and as players in the power sector, we think that with the state government now coming into as a player into the system, there's a need to possibly look into closing up the metering gap, because it's very key. If you pass the entire tariff to the customers, there's going to be chaos in the market, because those in estimated billing will not be able to pay for whatever is being estimated, because it's going to be very high. and there are no measurable components in terms of determining how much power these consumers are able to consume, or even how this consumer is able to manage their electricity through maybe turning off some of their major equipment they are using. Because at the end of the day, they end up paying estimated billing, which is going to be very, very, very high. So our view would be that there is a need to work with the state government to quickly close the metering gap, even up to the 85% before such exercise should be contemplated. And such that we know that what we'll be dealing with is issue of meter bypass and power theft, which can, we believe, with right regulatory support from the state and the federal government, is able to be contained at a minimum. But in the interim, we do not believe that the entire tariff should be passed to the consumers until there are some level of closing of the metering gap to 80 to 95% in terms of the customer we have today connecting to our electricity network.
But we have a lot of metering programs going on. There's a new one that the minister told us they're taking collection of thousands of meters this month and next month. Are they getting to those who really need to get them, these meters?
Yes, of course. I'm very much aware that there are a lot of interventions on the metering side of it. Today, those in Band A generally get meter free. You'll be sitting in your house and they will get a call that your meters are available for installation, that you should provide certain information for them to come and provide those meters. So we are aware that those are actually in progress. But then we think that possibly this needs to be much more aggressive than where we are, meaning that the state governments need to literally come in, especially now that most of them have actually passed their laws. I think about 18 states have, as of today, have passed their state electricity laws. About 3 states have technically taken up the management of their electricity markets. So we think that there is a need for the state to quickly come in terms of those metering, because the essence why the states were allowed to actually take control of their electricity in their various states is because they are closer to the consumers. And being closer to the consumers, they are able to identify those areas, working with the existing discourse on those who actually need these meters. They are also able to work with the government and the discourse to create additional incentive to bring other players in terms of the retail market players to come in and support to close this metering gap. Because I must say that metering is very key in terms of measuring how much power a consumer has consumed, and that gives that consumer that kind of confidence to actually pay for this power or look for another means to manage his electricity consumption to ensure that it continues to have power.
All right, thank you so much. We hope this gets to everyone soon. Talking about the meters now, Managing Director, Chief Executive Officer of Kensington Energy Limited, Mr. Chukwuani, thank you for your time.
Thank you very much.
Let's take a break now. When we come back, we head to the global space. The tariffs are still on, but we also have other stories. That's after the break here on Business Morning. Please stay with us. Welcome back to Watching Business Morning here on Channels Television. We start the global news from the United Kingdom, where the economy grew by 0.5%, 0.5% month on month in February. That's according to official data. Analysts have been expecting a monthly increase of 0.1, but we see it higher than that. In January, the UK economy unexpectedly shrank by 0.1% on a monthly basis, and so it does seem that that has been recouped a bit by this month, March. And then we see gold. Gold has been soaring since we last met yesterday. Gold prices surged to a record high in Asian trade, extending a recent run-up as demand for safe haven assets remained underpinned by heightened fears of a bitter U.S.-China trade war. The yellow metal clocked stellar gains this week, outpacing all other metals as investors piled into bullion and yen as safe havens. Routing U.S. Treasury prices was also noticed, and it's been added to this trend even as yields rose sharply. So we see gold jumped more than 1% to a record, the first time ever, $3,220.20 an ounce on a gold futures expiring in June soared also 1.7% to $3,231.69 per ounce. Gold surges amid U.S.-China trade tariff exchange. There's also the weak dollar demand for gold was also part of the mix, and that, of course, is heightened by volatility in risk-driven assets as the U.S. and China impose steep trade tariffs on each other this week. U.S. President Donald Trump has said that U.S. tariffs from China will mount up to 145%, while China has 84% on U.S. Trump has also signaled that he was waiting to be approached by China for trade talks, although Beijing expressed no intent of backing down. We don't know where that will lead the world to in the coming days. Now, tech tycoon Elon Musk, assigned by U.S. President Donald Trump to streamline the federal government, has projected a savings of $150 billion for the fiscal year 2026. This substantial saving is expected to come from a decrease in waste and fraudulent activities within the federal government of the United States. Meanwhile, President Donald Trump has announced his intention to retain the services of the Department of Government Efficiency, that's DOGE. The president made this known at the White House during a meeting with members of his cabinet. In attendance were Secretary of State Marco Rubio, departmental secretaries, and special government employee and tech billionaire himself, Elon Musk, who is leading that DOGE department. Still in the U.S., Goldman Sachs Group strategies, they revised higher their forecast for debt defaults by U.S. junk bond issuers and leveraged loan borrowers, citing widening credit spreads and pressures that U.S. tariff policies put on the world's largest economy. The default rate forecast for U.S. leveraged loan borrowers by the year end has been revised upward to 8% from 3.5%. According to a note from Goldman. And they also have raised the rate for U.S. junk bond issuers to 5% from 3%. Can we see the day that the U.S. will default on its bond responsibilities? We'll see. And still in the U.S., the dollar slumped on Friday as waning confidence in the U.S. economy prompted investors to ditch U.S. assets to the benefit of safe havens such as the Swiss francs, the yen, and the euro, as well as gold. We saw the yellow metal there hit an all-time peak, and the franc also notched a fresh decade high. Investors dumped Wall Street stocks overnight. A powerful relief rally on Wednesday when President Donald Trump abruptly paused higher tariff rates on dozens of trading partners and reversed course in frenetic 24-hour period for markets. Longer-dated U.S. Treasuries are also selling off, putting 10-year yields on course for their biggest weekly jump since 2001. Trump's 90-day respite, which came despite his insistence for days that his policies would never change, didn't include China. Instead, he ratcheted up duties on China's imports to an effective 145% rate, further escalating a high-stakes confrontation between the two largest economies. The Chinese yuan, on the other hand, had tumbled to an all-time low in offshore trading. That happened on Tuesday, but erased all those losses a day later and surged again on Thursday. It initially strengthened in the latest session as well as before trading slightly weaker. And we hear that the yuan is being intentionally weakened to make commodities from China cheaper for exports. Thailand will step up a crackdown on the practice of foreign companies circumventing high U.S. tariffs by claiming false certificates of origin as it prepares for negotiations with the Trump administration to secure relief from a 36% tariff hit. The Southeast Asian nation, which had an almost $46 billion trade surplus with the U.S., plans to add more products to a watch list of 49 goods as false claims of origin are among the key concerns of U.S. authorities. This is according to the Commerce Ministry. And Japanese households' inflation expectations heightened in 3 months to March. The Bank of Japan survey shows that this has kept the central bank under pressure to raise interest rates further. As many as 86.7% of households expect prices to rise a year from now, up from the previous survey's figure of 85.7 in December and the highest since June 2024. This is according to the Bank of Japan survey. Of the total households surveyed between February 6 and March 9, 83.5% expect prices to rise 5 years from now, up from 82.5% in December. Households expect prices to rise by an average of 12.2% a year from now. That's up from 11.5% in the previous survey, and by 9.6% 5 years from now. That's up from 9.2%. The survey, coupled with recent growing signs that companies are shedding their long-held aversions to price and wage hikes, suggests that domestic economic conditions for additional interest rate hikes were falling into place. And yes, now let's discuss China. The war now seems to be between the U.S. and China after the U.S. raised tariffs on Chinese imports to 145%. Of course, China hasn't shown any sign of backing down. And there's this strategy that China is hedging by weakening its currency. But let's get some closer information from that with Global Marketing Executive Amanda Wolverton joins us. Hi, Amanda. Welcome to the program. Good morning from Nigeria.
Good morning, Nigeria.
Great. So, it does seem like, a lot of people have said it seems President Trump was gunning for China from onset, and so every other country were just victims. What do you say to this? Does it look like this was supposed to actually be a U.S.-China battle?
It definitely appears to be, and as you can see, it has been a roller coaster for China for the last few days. If we take a second just to step back to look at China's economy as a whole, there is a metaphor saying that China's economy is being pulled by 3 horses. The first one is investment, and the second one is domestic consumption. And the third one, and probably the most profitable one, is exports. And as a matter of fact, exports contribute to 20% of China's overall GDP. So, and then it's also the cash cow for Chinese economy, fueling the other 2 horses. For example, in 2024, the trade surpluses of China's exports with United States is $295 billion. So when we look at that, when the tariff hits, so it's really having a huge impact of Chinese economy, especially when the first time when it hit was 10%, and then 10% additional. The exports business thought at the beginning they were working out with their U.S. business partners to see, to your point earlier, if they can reduce costs by various means to be able to work out the business collaboration. But then when it hit another to 34%, and everything paused because the businesses are not sure when the next boot is going to drop. And then it goes up to 84%. And this is the time all the orders from the US stopped, including Walmart, calling the business in China or suppliers in China to cancel their order. So right now, it's almost in a strange silent mode because people are basically kind of stunned by this and not sure what their next step should be. But then the 90-day pause was announced by President Trump. The businesses actually felt this is an opportunity for them to re-strategize and to see if they can come up with a way to maneuver or find a way for survival. So in a nutshell, the Chinese export businesses are in the mode of trying to find a way to survive.
So I mean, I'm just trying to imagine, is it even possible to implement this 145% on China and 84% on the US? Or do we just see a situation where there is no trade between China and the US? Can that scenario exist in the world?
It's a very good question. I think there's a book Trump wrote about the art of making a deal. So his maneuver or measures he announced for the last few days is almost exactly according to his strategy outlined in the book. So I don't see that in the future. It certainly seems like it's going to be decoupling completely between China and United States. But I really do not see that as a possible scenario for the future of global economy. So I think that the two countries will eventually come to the table. Even Trump for the last couple of days, his tone sounded a little bit more reconciliatory, and he said that Xi Jinping or President Xi is, in his words, that a good friend, basically. And so he is just making those measures, hoping that China will come to the table. So in summary, I think right now is a lot of posturing for negotiation. I definitely do not see the two countries will completely not do trade at all. That scenario to me is not possible. So it's all about when and how the two countries will come to the table, if they will be able to negotiate a solution out of right now the situation right now is almost completely is impossible for both countries, I think.
So Amanda, who do you think will blink first, the US or China?
It's a very good question. There was a lot of discussions about who will blink first. I think that is where the stalemate is, because none of the two leaders, none of them want to lose face, and none of them want to blink first. But eventually, I think right now is in a very emotional mode with 125%. That is not a logical approach, is very emotional. I think eventually both parties will come to the table and come out to be not a situation anyone lose. Will come out with solution. Seems like nobody actually loses in the situation. But I think it is a matter of time, and I'm very optimistic. It's not going to be completely decoupling of the two countries. I think both Trump and then I know President Xi in many occasions also gestured he wants to work with the United States. So eventually, I think the two countries will come to the table and work out a solution for both countries.
All right, Amanda, we'll wait and see who blinks first, whether it's the US or China. Amanda Wolverton is the Global Marketing Executive Thank you so much for your
Awesome.
perspective.
Thank you for having me.
Yeah, well, I guess we'll see there. Amanda thinks U.S. cannot do without China, and China cannot do without the U.S. So we'll see who blinks first and how we'll solve this problem. Thank you so much for being a part of Business Morning this Friday morning. I'll be back in a couple of hours. That'll be 1 p.m. and we'll give you an update from the world of business. I'm Ini John Mekwa. Get some money. I'll talk to you later.